All right, welcome back to the Bullish Bears YouTube channel. As usual, you got Bullish Bears Jeremy here, and we got Matthew Tuttle with us, and we're going to throw a little shade at Jim Cramer today, as usual.
Can I be Bullish Bears Matthew Tuttle or no?
You can. Go for it.
All right, let me think about that.
Yeah. I think you're kind of an honorary moderator at this point anyway. We've been doing this for quite a while now, and it's
All right.
well, our accuracy rating is off the charts, man. I don't think there's too many analysts out there like us. Heck, maybe we should just run a call-in thing, and instead of going live with this, just go live in the middle of the day at some point and just be like, ask the analyst, have people just chat with us on YouTube and send us tickers to look at and just look through them. That'd be really fun. I'd love that. I love being able to help people for one, and that kind of kills both birds with one stone. Plus, it's fun, and we can throw shade when we need to. I love laughing at things, and I'm sure everyone else has the same trader's sense of humor, we call it. So when we are throwing shade at Jim Cramer, doesn't mean we don't like him. He's a nice guy. We just like to kind of, I guess show a mirror to everybody and say, hey, you gotta look at yourself and have a sense of humor with this stuff. Because if you don't have thick skin in this industry, you're kind of gonna have a bad time. You got to be able to take some knocks. So we'll throw them at you. So anyway, I'm kind of looking at the general market, man. That's been one hell of a parabolic trend on SPY for quite a while. I marked out this diamond. I got like 1,000 goofy lines on my charts at any given moment, but this diamond pattern gives us so many targets to trade to, and we've knocked them all down as we've gone along. Once we noticed that this broadening pattern was starting to contract, it was pretty easy to draw it and make all of our target points. But now we're kind of up in the upper echelon here. We've hit the angular resistance outside the diamond. We've made the expected measured move out there. And we know that the market can be rational much longer than we can be liquid in any case. But we're kind of at a point where we're up against a bit of a wall up here. I think 490 is going to be a very tough reach for the short term. But the long term, eventually the market will melt through it, of course. But kind of looking like we should at least pull back and consolidate for a little while before we get going into a rip-roaring continuation of the economy. And if you caught the thing we did on Tesla yesterday, I kind of weighed out the good and the bad. There's a lot of good things happening in the background on Tesla, but there's some price support points that we talked about as well, and said if things go wrong on this earnings call, we've got some support targets below. And sure enough, we're starting to see a ton of inflow of buyers in that area. So kind of the same thing. We're looking at the market in general here with S&P or SPY in this case, and we're starting to make some dramatic accumulation in this area. Let me break this down into a 30-minute chart, and you can see these massive swings. They don't come from nothing. That's just basically the market trying to make a decision, and you can see it's forming yet another wedge in an area where it can go either way. We can get a pullback, we can get continuation. There's a lot of good things pointing to this year as far as being bullish in general, but there's also some things that are weighing on us. This supply chain issues, some things happening in China. World economics are going nuts right now, so anybody's game. But then we throw Cramer in the mix, and it's like, okay, now we've got even more fun to deal with. So what's the big thing that has been a good short for SJIM this week?
So really, I mean, Jim's been, kind of on a roll. One of the things that helped earlier in the week is that day, I forget which day it was, where, all the non-profitable stuff that he hates ramped.
Right.
Maybe that was Tuesday. I don't think it was Monday. It might have been Tuesday. So, that was a good day. But, beyond that, Mag 7 continues to do well. Bitcoin continues to go down. I mean, Jim's having a pretty good week this week. And, you can tell watching him on Mad Money, he's dancing around.
Yeah, he seems to be in a good mood lately. We kind of, I guess, maybe he does have the thick skin to required to be happy in this environment. I don't know. Well, it remains to be seen, but he's at least having an up day, an up week. Maybe he makes a couple more good calls. Speaking of good calls, I mean, we've had this 2-for-1 measured move I wanted to point out here. we've met the target more or less on that. I mean, 488 was about the limit on this box. You can see I drew a green line across the top. I slid it to the side because it was shading my chart too much on the shorter terms. But in general, these are basic measured moves, and we see them all the time. It's kind of the process we use when we figure out what the price action's telling us as one of many tools to establish whether we're going to follow Jim into a trade or we're going to absolutely turn the tables on the guy and take the other side of it. So I'm going to delete this for now. It's met its target. It's served its purpose. Good to go. Moving into the first list of things that he was talking about in the lightning rounds from last Friday till now. I'm going to start with the things that he said to stay away from. And this is where things kind of get interesting. So stay away from Getty was his answer. Can we say bullish or bearish yet on this thing? I don't know. It's kind of at a support point. So when he said it,
Yeah, I mean, I'm kind of liking where it is. It's one of those, short squeezy type of names where, if that stuff starts to pick up, and it's an old retail favorite. So, this is something that, if they decide to pile on it, could have a nice little move.
it's definitely got the range for it. I mean, this was probably one of the short squeezes for the record here. Look at that pop, man. It's massive. But yeah, we're in that market capitalization zone where we're at the lows and we're hanging around here consolidating. We've seen this many times before. I did it with Snap. I've done it with several others. Even Netflix, I've seen similar market structure. And anytime you've been accumulating for such a long time in a tight range on a low end after all the capitalization has taken shape, it's only a matter of time before you get a breakout move. And, this wedge is pretty undeniable in the base of this thing. I love drawing wedges. But as always, whenever there is a bull flag, bear flag, or any kind of wedge where you see this contracting pattern in price, usually they wind up tight and they will have probabilities outside. So typically the wedges will go for 60-40, 60% chance of follow through for whether they're a reversal or continuation. In this case, reversal because the bear trend was back here. But long story short, you still have that 40% chance of if it fails, it can run down lower. So it's at a point where it's starting to be liked. We can definitely at least trade it back up to, maybe 480, possibly an outreach move to about $5 or so to the angular. I'm with it. I could say maybe we could go along with it, but I'm going to wait for this little 4-hour pattern to play out. If it gives us a nice double bottom and a bounce out of here, I'll probably join you getting long on that. I love mean reversions too, and that old half back rule always sticks out to me. So I'm going to put a pivot right in the middle of that. Let's say about 472-ish, right in the middle of this little trend here, and right where it accumulated a couple bars. I'll say short term, that's a good target. Let me change my default. There we go. I like to make these visible. Yeah, I'm with it. I like this one. So we could say, he said stay away. I say maybe we take a chance on going long on this thing, keep the stops tight, and maybe wait for this pattern to play out a little bit more and see if we can get, in the next couple of days, a little bit of a boost out of this thing because Cramer mentioned it.
Yeah.
Next thing I was looking at, PRAX was one he said to stay away from. Said he did not like this one for some reason or another. Yeah, I mean, it's made a crazy parabolic move. I mean, that is just psycho, right? Looking at market structure, again, it was just a short squeeze. Massive bear trend, accumulation at the bottom for a while. Eventually you get that bounce up. So I kind of agree with him there. I wouldn't say to throw that in the SJIM portfolio, but I might consider running say a move back to base here where you get about halfway back. So maybe a bear target of like 2860 or so if this breaks down, but you never know. Sometimes these parabolic moves can continue on. So if you wanted to take into consideration that it can do something more like this, be a little bit careful. Wait for this pattern to break before you take either side of that. But if Jim said stay away, of course it's going to have some volume, some people looking at it anytime he
Yeah, I think
mentions
this
something.
was one he said buy BMY instead. I know there was one biotech he told the caller to buy BMY. This could have been it.
That might have been it. Let's have a look at BMY. Ah, another one. Market structure is so important, guys. You look at it and you're like, yeah, we see this accumulation. And he said, buy this instead. I don't know, man. That's still looking like it's got a few swings of accumulation. Maybe give it a till the end of the year. Maybe we'll start to see it swing up. It's gonna take a while. Yeah, I don't think that was a good call for him. I don't think he should have told that caller to buy anything, let alone BMY. I never.
Well, he shouldn't be telling anyone to buy anything, but
Yeah, true. That's kind of against the rules. We don't do that.
he
We just.
should be off the air, but he's not.
Yeah, I guess maybe the SEC kind of likes him for just bringing volume to the market, so they let it fly.
Oh, I've talked to the SEC about him. They just laugh.
Yep, kind of thought so. SLCA is another one he was saying, stay away from. And this one, I'm kind of liking for mean reversion. It's already mostly done. It was a pretty easy target to hit about 1090, 1095.
Yeah, I like this down here breaking through that 1042 low in November. I mean, that's a nice little stop. Today you have an undercut and rally at the 10-day. Yeah, I mean, I wouldn't mind this one down here.
Yeah, it could make the move, and just the old mean reversion. Throw a line on your chart. Draw on your chart, everybody, even if it's with a crayon. So, yeah, about 1095 would be a great little bull target from this move here. I kind of like it. It's not the best chart. It doesn't have the best volume or stability. I mean, it's pretty choppy, but more or less, it's got a good swing rate in it. I'd say reasonable. Just for the fact that Cramer said stay away doesn't mean I'm going to bias and say buy it. But it's a decent looking chart enough to where you can make a good play on it, get a few cents out of it. The other one that was kind of catching my attention is he said stay away from Ferrari. I guess there's just not enough millionaires out there buying Ferraris these days, but the chart doesn't care. The chart is going to tell you where it's going to go.
And the economic numbers are looking good. So,
and maybe if our accuracy rating is high, like we're pushing the 90% areas here. With every week we've brought this to you, we've been pretty much dead on with all the callouts we've made for price targets and stuff like that, more or less. Maybe we make a few millionaires and they go out and buy Ferraris.
There we go.
That's all I could want in
not
life.
taking that into his analysis.
That's a good point.
Yeah, on this one, I'd use 331.30. That's the January low. It undercut and rallied above that today. I mean, to me, this is viable right here.
Yeah, it's looking good as long as it doesn't break down and test this gap. But yeah, I'm kind of liking it too. As far as that goes, maybe he should start watching our show. Just saying.
How do you know he doesn't?
That's true. I guess he's been known to kind of. I know he's checked us out before. If you're listening, Jim, we love you, man. We also love throwing shade at you. It's what we do. It's why we're here. But yeah, looking at this one, okay, I would say I'd probably kind of wait for a better sign of going long here. But that does look like one hell of a parabolic drop. You do have the makings of a double bottom. If it holds that support area, I like it too. Maybe we can go long on that and catch a ride back to 340 or so. Be decent. But again, I'm going to be patient with this one before I jump the gun on it. But, that's just me. I'm a little more cautious and frugal on that type of stuff. I'd say maybe give us a move probably outside of this range by about next week. But look at shorter term stuff. Say a break above 333 would give us a quick little move to 335 and like 337 respectfully. Good stuff. Delta Airlines was another one he said to stay away from. That one, I'm not going to throw a kudo on you, dude. That was a bad call. This was a BTFD moment, and in that time space, I mean, that's kind of run up really nicely. But in the long run, it's still kind of in an accumulation pattern, and it met its mean reversion target Bullish Bears, we did some wheel trading on this a while back, and gosh, I think that was even last year, if I'm not mistaken. Yeah, we ran this whole trend.
This one's doubly bad because he flipped. He was bullish on Delta, and that was in the 40s.
Right. And now we're just kind of hanging around, making a quick move as a spike back to that mean reversion. And look further left, guys. This is quite choppy on the weekly chart, but there are some things that are important to pay attention to. And we know airlines have had their share of troubles this year, last year, and well, forever. They just kind of always do. Someone was saying, like, airlines are run by some of the worst management in any industry, let alone their industry. So that's just kind of how it goes. It's really hard to manage something with so many facets, though. I know a little bit about the aviation industry, and gosh, man, I got to say that the airlines run pretty lean when it comes to manpower, and the bulk of the margin is not necessarily put into growth. It's more or less just kind of spend it as it comes kind of thing. So if they do expansion, they'll put some in there, buy some new planes and stuff like that. But the hard part is the maintenance staff. Those guys come and go. The rotation of airline mechanics is pretty high, and for a number of reasons. And sometimes they'll love a company, sometimes they won't. And that's just kind of what we see. Whenever there's a maintenance issue, like a wheel falling off or something like that, it always comes back to the guys working on the planes. And unfortunately, that's not. I think that management of airline industries should focus a little bit more on taking care of the guys whose backs they stand upon. I'm just going to say it like that. They need to take better care of their ground crews and maintenance crews. That's all I'm going to say about that. I can't really get into details because I've been on that side of the fence. It's a rough day. But
Yep.
At any rate, I think if they'd focused there, they'd have a little bit more smooth operations in the long run. And if they just, quit tripping over dollars to pick up dimes, they can make that happen. As far as Delta Airlines go, I'm going to pick off this accumulation, and if I see this break either side, it'll be a good trade. Maybe we'll get a bullish measured move back to the previous high around $49.50. Maybe we'll reject here and come back down to the low here around $30.50 or so. But I'm going to wait a few days for or probably till the end of the week, next week, to be into this at all. Just my point. I might scalp it for day trading, but other than that, I'm not really interested in Delta per se. But since Cramer said to avoid it,
I'm not interested in the airlines. I mean, that's still that move since the beginning of November. It is just crazy. And the economic numbers have looked good. I don't believe them. I don't think the consumer's in good shape at all.
no.
And yeah, I wouldn't be going crazy on the airlines beyond just trading.
Agreed. It makes great trading. I've made some pretty good options income swing trading the trends when they do break range. This was just, we had an epical time trading this last year. But yeah, it's just the consumer's not doing the greatest right now, and management is trying to fight on both sides, trying to streamline things, and that's exactly what we're seeing in the chart. You don't have to be a fundamental analyst to really see that playing out, but I think probably in the next few weeks we may have a breakout move, and it will more likely be to the downside. But for the time being, can we give Jimbo a pass on this one and say, since he said stay away from it?
No, we definitely cannot, because again, remember, he was telling you to buy it in the 40s. Then it's a traditional Cramer pick where he tells you to buy it when it's high,
right?
Then it sells off, and he tells you to avoid it.
Yeah, good point. I could say that we throw some shade on him for that one. Shame on you. But from an investor standpoint, I can almost say, okay, yeah, for the investor, it's definitely not investable at this point in any of the airline industries for what it's worth. So maybe okay for the investor's standpoint, all right, but from the trader standpoint, hell no, these things are great for trading. I love the volatility in the airlines, so I can't really give him a pass, but I can't really give him a kudo either. So maybe just trade it if you want, and just scalp it. Hell, I even have it on my T-shirt. Just scalp it. All right, last one in the stay away group. He said this flower corp here, stay away, and I'm just like, the moment he said it, it just spiked to like $39. Up from
What's that symbol?
FLR.
Oh, floor. Yeah.
Floor. Yeah, geez, I didn't. That's a
I
flower.
don't know how to pronounce
Whichever.
it. It's an industrial.
And I'm just like, that's not my most interesting chart to trade per se, but to stay away from it and just watch it just rip $1 up, that was funny. But now, yeah, okay, I can see it's a bit parabolic. It's kind of looking for a pullback. So again, investor standpoint, sure, maybe stay away. But from trader standpoint, I love volatility, so I can't give a pass on this one either, I guess. It's not a chart.
Yeah, no, I mean, we'll see. I mean, it looks viable here above the 50-day, which is 5 cents up there. I mean, it's 38.13, 50 days, 38.18. If it broke above it. Yeah, I mean, I'm not a huge fan of trading the industrials. So,
Yeah, me neither.
and this is an all over the place chart too.
It's choppier than I'll get at, and it's definitely one that doesn't interest me as a trader for like swing trades or any options action or stuff like that. But I do see one possibility. I'm going to stack it up here. Whenever I see a big range bar like this, it's either going to give half back, whole back, or if it breaks out of range, you get half or whole range bar above. So maybe it's got potential to run up to $40, but it's not a smooth enough chart to really make heads or tails as a swing trader, but day trade it. You can find your targets.
One of my kids is an industrial analyst at a big hedge fund. I'm sure they trade this, but
I bet they do.
No idea what they think of it.
Yeah, it's one of those. That's a crapshoot for pretty much anybody, unless you've got some serious sway as far as working capital. You tend to stay away from a choppy chart like that, and that's from a retail standpoint where you're going to be. But if you're day trading anyway and you take advantage of the volatility, you can certainly find those price targets. Just look at the range bars; they're there. You can get those targets for day trading, but yeah, day trade only. I'm not going to mess with this other than that. If I'm even interested in day trading it, because a dollar move to me on a $30 stock isn't quite my cup of tea. I like stuff a little more volatile, a little more smooth, but to each their own. So I got a couple vibes off of the last few lightning rounds, and he didn't really say buy or sell. He just sort of passed it off as a pass on this one, or he said maybe we'll come back to this later type of thing. So I kind of take that as a hold. So I put it in my Cramer list under hold. One in particular was this guy here, RXST. And I don't know, man. This one gives me the move where it's been parabolic. It's got the pullback. It's all taken shape. It's accumulated. It broke its accumulation range just a little bit today. Can it go a little higher, maybe hit the 57 mark for a full measured move from this gap? Maybe. Or it can give half of it back. So I'm keeping an eye on this one. This one almost interests me. It's either going to drop through this and hit 41, or it'll hang here and then push on.
What's the symbol again?
RXST. I don't even know what the company does.
Yeah, it looks like probably something with healthcare.
Something like that. It's crazy. I rarely look at even profiles of companies. If it says, up here, if it says, it's in biotech or whatever the heck, it'll tell me. But this doesn't.
First and only FDA approved lens that can be adjusted after cataract surgery.
Wow, that's kind of cool, actually. Maybe one day when I'm old and cataracty, I can use that. But at any rate, a lot of the biotech stocks or synthetic device type of things where they're like making a heart valve or this or that, they burn through incredible amounts of cash to develop those things. And when they do get approved, yes, they get market share. And if they sell the idea, make a big paycheck and go home and go on to the next project. So in my experience, biotechs will hemorrhage cash for years and years and years until they do something like this. And that's exactly where we take the trading aspect from it. So when I'm watching biotechs, I'm not just watching for like FDA reports and stuff. I just watch the price action. I don't need to really care about the FDA. I can go and say, well, general market structure is pretty evident. And in this one, this has just been a launch pad. There is no market structure here other than this looks like that run up before you start to see capitalization afterwards. So watch this one. If it can't break out of this area, it'll certainly give that market structure appearance and start to eat back to 20 bucks. It's just kind of a par for the course when it comes to biotechs, but I could be wrong. This thing could just run to $1,000 for all I know. I just trade the price action, trade the chart that's in front of me. So in this one, I'm waiting. I might give it a little shot, but I'm not going to trade it too much. Another one that he kind of gave a hold 5 onto was this guy here, this ILMN. I forget the exact words, but he compared it to being a poor man's version of some other stock in the same sector. But I noticed that it's got a halfway decent setup. Even though we had the market structure thing, we had the accumulation, it broke down instead of out. And suddenly we've got this little accumulation and retracement pattern here from this move here. There is an outside chance of a half or whole measured move set up here, so maybe we break out of this. Some people will notice this looks a lot like the inverse head and shoulders that everybody and their mother looks for and tries to trade bullish on. But you got to remember, you're not the only one looking at that.
Also looks kind of like a cup with handle, which I don't think there's anything in that pattern, but sometimes that's a self-fulfilling prophecy.
It can be. My biggest thing with, and I used to only trade patterns for a long time. I used to really focus on them. And one thing I always caught from the outside is if you go to like stockcharts.com and go look up, I usually use Google to find these because it's easier, but because their built-in search engine kind of, you Google stock charts or chart school and the subject you want. The definition of cup and handle is a continuation pattern, and like every time I've heard most people talk about it in the retail side of things is they look at it as a reversal. They look at it as a bottom pattern, and it's not. Rounding bottom is a pattern, but it's not a cup and handle. Here's what we're talking about. This is a cup and handle because we have a trend, we have an accumulation pattern here, and it is rounding. And this is where the handle is. So if we pull back, hit that 135, 136 area and find that there's some footing there for buyers, then maybe we can run a full measure move out of this thing. But typically the cup and handle is going to give you half of its range outside of the break above the previous high. So you usually kind of stick this into effect here of, and sometimes you'll see me drawing boxes within boxes. There's your short-term target if this actually breaks out of a cup and handle, and say 155 is about the good number. Pretty simple stuff, but when you've seen enough screen time on this stuff like we have, it's pretty much elementary at that point. Usually you can pick these off a dime a dozen. And this one looks fairly good. I would say wait for the accumulation to break range and give you a breakout trade, and then you know where the targets are, so it's pretty easy to see. So I'm going to mark this out. If it breaks range, 155 is a good bull target. If it fails, you know, your bearish retracement's down here at like 117, so give or take. I think he only had one sell. He was saying sell Tesla.
Sell Tesla, yeah. And yeah, he's been right. I mean, he's saying that it's either the Magnificent Six now, and he said that before earnings too. I mean, you know, got to give him credit where credit's due. Or he's saying the Magnificent Seven now includes Eli Lilly and not Tesla.
Right. I think that's what he said. He said trade Lilly for Tesla. Like get Tesla out of the Mag 7 and put Lilly in.
He said both things. He said Mag 6 and he said Mag 7, but now it's Lilly.
And I'll look at Lilly next, but Tesla. I mean, last night I put out a video going into the earnings where I'm a little bit biased to the bull side on the long run because I can see a lot of the things happening in the background. I can see that Toyota and Tesla are fiercely competing in the electric vehicle market. And then I heard something. I think it just came out yesterday where the CEO of Toyota was saying, at best, he only sees a 30% market share in the overall automotive industry for electric vehicles, all the way out to like 2040. It's a kind of a hyperbolic thing that's been pushed on us too fast, and the big three is failing miserable at EV. Tesla's had the niche, but then cold weather hits pretty much every year, and we see the same thing. We see headwinds. We've got compounded with supply chain issues and such, making factory efficiencies lower and blah 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 blah. There's your headwinds. It's right on the chart. So I mean, I picked off in this video. I'm like, if things go south in this call, we have a couple support areas. If it cracks 195, I've got a target all the way down here at 165, and another target at 168 that I mentioned in the video, but I didn't have marked. Let me see here. 168 is around somewhere around there. And it's just basically dropping that whole gap. So yeah, we could get some buying opportunities, and that's where we're looking. This was the short-term liquidity zone where buyers would be. There were a demand zone. It fell through, got melted last night, and it's continuing to melt today. We've got a 2-for-1 measure move set up below my famous 207 pivot. If you were with me last year, I killed it to 207 from $100. It was pretty killer. Now we're looking for another line at measured move length is 178. So it's kind of weird. You got 68, 78, and then 65 is like the floor. Like if it breaks 165, all hell's going to break loose. But internally, the fact that the two survivors in the EV market in general are going to be Tesla and Toyota, because the big three is, like I said, failing miserably at EVs. Combine that with a couple things in the works in the background, with the Tesla bot possibly replacing a bunch of the factory forces and then being something that he can lease out to other manufacturers in both that industry and pretty much any manufacturing industry. Kind of rings the bell of maybe this could be an opportunity where things start to turn around after this big sell-off, of course. And then on the outset side, my dog's going nuts. On the outset side, you got to look at Toyota. They're coming out with that solid-state battery. It charges in 10 minutes, and their car, they're saying, has a 700-mile range on the charge. Even in cold weather, solid-state batteries are slightly effective, but not nearly as much as the nickel metal hydride batteries that Teslas use. Maybe if they trade some technology there, and they have kind of been trading some technology there, over time, even in cold weather, let's say your 10-minute charge gets you 700 miles in fair weather. Maybe in cold weather, it only gets you 300 miles. It's still about equivalent to a tank of gas today in your combustion engine vehicles. So in the long run, I'm still a bit bullish on Tesla, but now I'm just seeing buying opportunities, and I just wait patiently for that to take shape. In the meantime, I can day trade it. So happy there.
Yeah, I mean, in the morning, 191.25, which is the low from back in October, was my level. I mean, now I don't really see a lot until the 150s. But we will see. I wouldn't bet against Tesla. I wouldn't bet against Elon. Just him being who he is makes this stock pretty memey. And, so I would be very careful if you're shorting now.
Yeah, it's definitely risky to short right now. I mean, it's already made a hell of a move here. So at any point.
And we've seen a ton of flow this morning. It's a long day, but we've seen a ton of retail flow into Tesla T this morning. So, at least from my little window, people are buying the dip.
That's what it's looking like. And, the leverage ETF is, I must say, I'm not just trying to, pump you to the crowd here, but it's managed very well. I've been paying close attention to leverage in there, and it's more than 2x efficient, just slightly, in my opinion. And it tracks very nicely. It's you're balancing that thing every day.
Yeah, I mean, my trader is anal about getting this right every single day.
Hey, man, that's the guy you want to keep. And And in the long run, I mean, if he maintains striving for perfection that a lot of people do, I kind of like that. Buying that as a leverage on Tesla is the way to go. I'm not trying to say there's a cross promotional thing here going, but I like TSLT, and in the day trading thing, I was able to day trade the earnings call last night with it. Did very well with it, and then there's also TSLZ, which I don't know what the flows are on that today, but that was quite the day trade already.
Yeah,
So
we haven't seen any numbers yet on that. I My sense is the 20 million we saw in TSLT this morning was mostly overnight and pre-market. But I mean, Tesla Z from a volume standpoint is trading more than the AUM. So my expectation would be we'll see inflows, but we'll see.
I think it could pick up some volume, but heck, it's almost at that 2-for-1, by the way. So maybe you'll see a little spike right about 1270. And then TSLZ. I mean, that was just one hell of a parabolic move. When it hits 40, you might see that flip a little bit, but so far it's looking like it's got strong volume on the 2-hour chart. But I mean, on the 5-hour chart, it's a little skippy, but yeah, it's got some decent upticks in flows. I don't know if you've seen the numbers or you haven't seen the numbers yet, but so far the volume's looking pretty solid.
Yeah, we'll know by 3 o'clock. That's the cutoff for brokers creating.
Cool, man. I can't wait to see the numbers. And then I think last but not least, he has 4 things in the buy zone, but they're really kind of a crapshoot. One of them he was saying was Colgate. I don't know if I'd buy it there. I just don't like that.
Yeah.
It's already gone parabolic. It's due for a pullback. I don't know how much of Colgate's supply is made overseas, but I would say things are kind of shaken up in that sector. So we'll see, but I wouldn't personally buy it here. It's just a little bit top heavy to me.
Yeah, I mean, for a consumer staple type name that's, moved 13 points since the beginning of October. Yeah, no thanks. I'll wait for a pullback.
Yeah, and this is if you see it start to round off like this, another one of those patterns. This is like the inverse cup and handle. So at the top of a bull trend, you start to see this round off, and you basically could flip your chart over and say, oh, well, this looks like a cup and handle. So pullback would be appropriate right here. And then if it goes and hits the base of the bull, I mean, 76, 75 is a pretty easy bear target for that if it starts to sell off there. So yeah, I think I'm going to kind of stay away from that one. But he said buy, it brought some volume on. But when he did say buy, this was a top tick like no other. So I'm thinking I'm not going to buy it. I'm going to absolutely oppose old Jimbo's advice on this one, and hell, I might even short this. I kind of like the short setup, actually. I'll have to write that one down. It's going to be on my list today. Next one who's saying, and I call this a top tick, but it could still go higher, was Micron. And I marked it out earlier this morning. I only had 2 squares on my chart this morning, but then later I added this third one, and I know the half and whole rule. So about $90, $91 would probably be about the top of this shoot because it's been pretty dang parabolic. He did say buy this. Half a kudo for saying it's the right time, okay. But I don't know.
Yeah, and he's been on Micron a few times, so I don't know the exact timing, but my guess is he's probably been pretty good on this one.
Yeah, outside it's had its market structure moves. Whoops, I just moved my pivot. You go and look left. That's all been done twice. That accumulated, broke out of the range. Okay, well, previous highs matter, and there's the half and whole move, and here we have a previous body here, and in a candle you got your open, close, high, and low, and we're right in the open of this red candle here. So this would be a zone where I would be like looking for sellers. So careful with this one. I wouldn't say he top ticked it, but I would say that I would look to possibly take profit around 91 bucks if I was already long in this thing and then he spoke about it. You know what I mean?
Yeah.
If it does pull back there, we've got some base targets for the bears around 86 bucks and maybe a pullback as far as like $80 is appropriate. But I certainly wouldn't be chasing this much higher than it is now. I'd prefer to be patient on this one. And from an investor standpoint, great company, love Micron, but yeah, I would just be cautious on the price action at this point. 2 more to go. Procter & Gamble, he said, was a buy. Can you say parabolic and gap? Man, yes you can. And here's your weekly candle. Outside move, 1-for-1. It hit the previous highs and instantly faded. So be careful again with this one. This is our daily chart here. This is where, you know, he was starting to say buy and big old flash of bearish engulfing candle. If this candle falls outside, typically it'll eat at least half that gap. Watch for bears to start covering around 150. And this is where you trip the wire here at about 152. So definitely be careful if you're long this stock on Cramer's suggestion on that. Half a kudo because it did pop up when he said something about it, but just be careful. This is where the profit takers are going to be. This is where the bears are going to be waiting. So just be cautious with this one. Yeah, not necessarily a pass. I guess we can just give credit on this one, but like I said, I would be careful not to chase it any higher. Last one, this Tetra, or what the heck is this? TTEK, Tetra Tech.
What's the symbol?
TTEK.
I remember that.
I know nothing about this one, but it's got kind of
I don't either. I don't like the chart though. Looked like a short to me.
It's hard to chart. It's got definitely a setup that I've seen many times before where it can also trap you. So it's not a chart I would be trading, but more often than not, I've seen these rounding tops where they look like they're going to do that massive drop, and then they end up being the inverted cup and handle. So they follow right to a base of a range bar, and in this case, it's this guy here. So bears are going to try and push that to like 157 or so from 160, 161 here where it's at. If they can't break the floor on this thing, though, sometimes they only get half a range bar and it'll bounce, and that's where you get that little handle from. So it'll go right back to the previous high and then shoot down to the low. So be careful in this one. If you're going to try and buy this, I wouldn't chase it here. I would definitely throw shade at Cramer for this one. He said buy. I don't think so, Jim. Would I short it though?
Yeah, don't forget the China names.
Yeah.
So Jim has been negative on China for a while, and again, he's been right. I mean, it hurts coming out of my mouth, but he flipped short term. He sent out a tweet yesterday saying that if he were a hedge fund manager, he'd be going along the, a lot of those China names. And yeah, I mean, FXI, which I happen to be short, is down a drop this morning. So we'll see.
I can see one. I guess I could call a half-assed technical pattern at this point because it's not quite followed through. But they say H is hell for bears. It's kind of got that H look. It can bounce here, but just short term. Worst case scenario, we see FXI back to 37 later, but that's going to take some time. Unless China really flips on some policies and actually follows through with this stimulus package that they've put out, I don't know, man. I don't know if I trust that move. Unless they come out and say,
no, I mean that's why I'm short at the moment. But to me, China's a trading thing at this point. I wouldn't, I wouldn't be looking long term one way or the other.
No, me neither. And I used to love shorting FXI, and my favorite time to short it was back when Trump would start tweeting about the the taxes that the tariffs. And let me look back because this was an incredible short. This number here, man, this was just epical. Come into 2008, slams. All right, so it was starting to kind of consolidate, and then what happens? Well, you get this all wound out into market structure again. And then when we came into the tariff territory, we started seeing some real big changes here. That's where this number hit, right in this area. So it kind of took the walk down, bounced around, made that high when a certain someone started lifting all those tariffs, and then now we're just trended down, cycled back down. Other than that, I don't tend to trade FXI too much, but now I'm thinking unless China absolutely 180s on a whole bunch of their policies, including like the one baby per couple thing, I mean, they're just not going to pull out of this like everybody seems to think they will. And I'm pretty sure things are starting to look a little worse every day over there. A stimulus package and maybe okay, you can have two babies. That might change things, but other than that, I don't think I like China very much. Maybe some shippers, but not China. Should I mention Zim?
You could. I mean, Jim has been not for a while though, but that's when Jim was negative on.
Mm-hmm.
I think he commented on it maybe a week or so ago, just, I mean, saying that it's more of a trading thing than anything else.
Right. And, being beaten down by socioeconomic things and global economics and, the war in Ukraine, the whole shebang, China being aggressive. I mean, it's bound to rotate at some point, and we're kind of seeing the potential for rotation here. It's more or less confirmed sector rotation for shippers, but it's at a point where it's going to have some consolidation time, I think. So maybe.
Well, and remember, a lot of what's going on in shippers is kind of geopolitical stuff. So
Right.
you always gotta, take that with a grain of salt. It's not, something that's fundamentally changed in the marketplace. You've got, all this Houthi rebel stuff.
Yeah.
And if that goes away, you don't know what impact that's going to have.
Very, very true. So it puts scrutiny on the sector, brings attention to it, brings volume and volatility to it. Great for traders, but investment standpoint, I'm seeing the beginnings of rotation on the chart, but I wouldn't call it confirmed yet. So it's exactly parallel to that. It's a dynamic environment. I mean, you got those global economics kind of shaking things up right now. So um, I'm gonna keep an eye on this thing for maybe running a mean reversion back to like $10 because that's possible in the longer term here. But usually these kind of tend to break one way or another. Gonna be a wait and see. I wouldn't pound the table and say buy it like Jim didn't say. We were saying that. But at this point, it's kind of it's a wait and see. The trade's over. Let's wait for the next setup. Well, anyway, I think next week we should have some more fun once we got all the earnings and stuff out of the way. This week we should be able to see some smoother trends. And anything kind of on your radar for looking at long or short positions?
Not really, no. I mean, I'm somewhat dubious of this market going anywhere except for sideways. You've got that massive disconnect between, what the Fed is saying they're going to do and what the market is expecting. We have PCE tomorrow. I mean, maybe that makes things interesting. So we'll see. But, until there's some clarity, either, long or short, we're just going to be doing mean reversion stuff. If something's down, I'm going to buy it. When it goes up, I'm going to sell it, and I'm going to keep moving around. So yesterday I bought a bunch of gold miners because they were down. Last I looked, they were up. I'll probably sell them today. And if they go down tomorrow, I'll probably buy them. And, same with a whole bunch of other stuff. I don't I don't think we're going to see, and then, I'm buying the Mag 7 on weakness. I don't think we're going to see a major trend one way or the other. So
Right.
I'm just looking at mean reversion stuff.
And that's kind of the MO of the market anyway. I mean, the old adage of buy low, sell high, rinse, repeat is one thing, but then there's a two-way street in there somewhere where you can go buy low, sell high, buy low. So you can go and flip your position. And that's exactly what we're going to see is a lot of sideways, I think, going into next week, and then maybe we'll come out with some swings going into towards the well, maybe towards the end of the first quarter here, we'll start to see some swings and trends. But till then, just trade what's in front of you. That's all we can do. Last note, I guess Nvidia is thinking about a split, maybe 5-1 or 6-1 or something like that, forward split. That would almost make this stock
Interesting.
tradable.
I didn't hear that, but I mean, I sort of hope they don't. I mean, one of the reasons I love having the 2x long and short on Nvidia is, number one, the share price is high. You can buy the 2x for less, but then also the options.
Right.
So like, I bought some, as we were speaking, I bought some TSLT options, a whole lot, I can position size a whole lot better than I can buying Tesla options. And same if I were buying Nvidia.
Absolutely. I mean, the cost outlay on Nvidia options right now is just, I mean, it's not just unfair, it's like insane. The cost
Right.
on some of those options. And
Yeah, I mean, that's what I love about levered and inverse. So
right. I mean, there's some big numbers on those options chains. I mean, from an option seller, if you got long way low and you can sell far enough out of the money to take advantage of that, cool. You make pretty damn good returns.
Jim just sent out another negative Bitcoin tweet.
Nice. Yeah, he's kind of following what's his nuts on that, so he's just parroting. um, let's have a look real quick. I've got a short target on it down here to about 38, but hasn't quite hit it yet. It's getting close. But I shorted a couple legs of this, but I haven't really messed with it much. Only because I'm not as into crypto as I'd like to be. It's tradable, sure, but I can't sell options on it. I can
Well,
go
you
and trade
can. I
futures,
mean,
but
you can, Bitto has options.
true.
I haven't looked at the spot guys yet. I would assume the spot guys probably have options by now.
That's a good
And
question.
then, obviously the miners have options.
Yeah, I think once all the ETFs start to settle and get some options flow, it'll be worth doing. But in the meantime,
Yeah, and I would be surprised if they didn't already have some flow going, but maybe not.
I mean, I was looking at some of those BTC futures contracts, and they take a heck of a lot of margin to trade just one of the dang things. They have the nanos, but
Well,
they're
IBIT
just
doesn't have options yet. That's weird.
they might have to hit that 60-day mark before they can have it or something.
No, you don't. I mean, I got options pretty quick
Yeah, you did.
on some of the T-Rex stuff. It's really it's more of a volume thing, but maybe
Right.
it's a regulatory issue. That could be it.
That's possible because I mean, leverage on um, cryptocurrency is going to be kind of hard to push that past the regulatory stuff. But I don't know, maybe that's a hiccup. But I'm sure eventually they'll have some sort of options. But nonetheless, I can still trade it in my futures account a little bit if I want. But I've been kind of standoffish on crypto, especially this year. But next year, when things start to smooth out with those ETFs, it might make it more playable. And if nothing else, maybe if it actually becomes somewhat stable-ish or kind of curves with the U.S. dollar, perhaps it'll be a viable currency for things. But I don't know, man. I hate to be paid in Bitcoin and have to get rid of it so fast because I'm not, worried about it losing half its value overnight. You know what I mean?
Yeah.
So as a store of value, good luck. But as a tradable asset, okay, it's tradable. It's just a matter of it has some pretty insane moves out of nowhere sometimes, and even as smooth as a chart can be, it's really challenging to trade that effectively. It's a good challenge, but I can find targets on it pretty easy. But sometimes it just get wild outside moves out of nowhere, a news tweet or something. Anyway, I think we ran a little long this week, but we had a lot to talk about for sure. And I think next week we're probably going to have a little bit more out of Cramer. By the time we get to the end of next week, we should have some good stuff to talk about. So
I would hope so.
Right on. Well, thanks again for joining, and be sure and like, subscribe, hit the bell so you get a notification when we come out. And we're still kicking around the idea of doing this live, but then we're also thinking, we could just do a straight call-in show, and hell, maybe we'll do Kramer's job for him and have people call in or just chat in with tickers for us to look up. We'll do it live on YouTube. Something like that would be kind of fun. We're kicking it around. We'll come up with something. I like the idea of being able to help people in general. So, like, if you get someone asking questions about something Cramer said or something, we're quick to respond anyway. So, throw this into a live format, and that'd be even more fun. But we're debating whether we just keep doing this the way we're doing it and then do something else live, or if we bring this live. We're still kind of deciding. So hit us up in the comments, if you will, and kind of tell us what you think. That'd be very helpful. All right. Thanks again, guys. We'll see you next week.